the BMO Commercial Banking here in Vancouver. Delighted to welcome you all to our webinar on Conversations to Summit, Funding the Future. Before we begin, I want to quickly acknowledge that we are on the traditional, ancestral, and unceded territories of the Musqueam, Squamish, and Tsleil-Waututh nations. So on behalf of BMO and Digital, thank you for being here. Without further ado, I'm going to turn it over here to our moderator, William Johnson from the Vancouver Tech Journal, to carry on. So William, over to you.
Well, thanks a lot, Matt, for that introduction and getting us started here. Welcome to everyone who's tuning in. I see we got 30 folks there, and the list is growing. And welcome to Conversations to Summit. The session today is really designed to equip Canadian SMEs with practical insights, how to fund their growth using a strategic mix of non-dilutive capital, R&D incentives, different financial tools. And we're doing this, with a context that we're quickly approaching Web Summit in Vancouver. So we want the Canadian entrepreneurs and SMEs here in the room to feel like they're equipped to have the right conversations with people as we get into this really busy, really exciting time. We have an incredible panel here today with a mix of people from Digital, Post AI, EDC, and Metaspectral. Really excited to have these panelists here. And to get started, before we get into the practical insights, I want to make sure we give each of our panelists just a minute, maybe even 30 seconds to introduce themselves and tell us a little bit about the company that they're working with and sort of the concepts that they bring to this conversation. And then we'll get into the. But why don't we get into it? I'm going to throw it over to Jen Milguy from Digital just to kick us off, and then we'll go through our panelists today. Jen, welcome.
Thanks so much. Pleasure to be here. Thank you for having us. Jen, Director, IP and Partnerships at Digital, one of Canada's global innovation clusters where we're unlocking scaling growth, commercial opportunities for Canadian innovators through a collaborative innovation model that's focused on solving some of industry's and society's greatest challenges in areas that are key and critical to Canada's health and prosperity, such as mining, forestry, agriculture, health and life sciences, housing and skilling. And it's pulled together through consortiums of innovators, industries, researchers, community and government partners that come together to build these made in Canada world-class digital solutions.
Wonderful. Thanks so much for that, Jed. Looking forward to digging into more of digital and how you can work with SMEs. Dawson, why don't we jump to you?
Absolutely. Yeah, thanks, Will. Dawson Drolet, Director of Business Development at Post AI. I'm sure some in the crowd are probably familiar with us, but if you haven't heard of us before, we're a Vancouver headquartered company. We help organizations with non-dilutive funding, particularly with SHRED and financing of expected SHRED returns. So we're a consulting and software company in that space and leverage both of those to help our companies that we work with maximize and do these claims properly on an annual basis. So yeah, we'll jump into this stuff later today.
Yeah, thanks a lot, Dawson. Thank you for being here. Michael, how about you?
Hi, thank you so much. It's a pleasure to be here. Michael Ansara, I'm a Senior Relationship Manager at Export Development Canada. So for those who are not familiar, we're Canada's export credit agency. We operate at arm's length from the federal government, and our mandate is to basically help Canadian companies, including the digital industries, go and grow and succeed internationally through a mixture of risk mitigation tools and working capital tools that agency has.
Great. Thanks so much, Michael. And then certainly not least, but last, Lee Martin Boyd with Metaspectral. Tell us about Metaspectral. What are you folks up to?
Thanks, William, for the introduction, and thanks for having us. So again, my name is Lee. I'm the Director of Government Programs here at Metaspectral. My role includes not just business development related to government programs, but also I oversee the management and administration of any projects and programs won for the company. So I've been in this role for about 2 years at Metaspectral, but formerly worked with a company called MDA, otherwise known as McDonald Detweiler and Associates, who was involved in helping Digital get going in the first place as a project and program manager focused primarily on research and development projects. So in my current and most of my former roles and workplaces, my focus has been on looking for funding opportunities that align with the company's technology development roadmap. And that's where, digital has come into our life that way. So just a bit of background on Metaspectral and why we are included in this call. Over the last 6 or so years, we've been developing a novel hyperspectral data analysis software that uses deep learning and are also a solutions provider and integrator in that we build turnkey solutions that incorporate a variety of different hyperspectral sensors, as well as our hyperspectral software for a variety of industries. And so recycling, I will talk about that later in this call and how that's become part of the digital network.
Wonderful. It sounds really innovative, and I think it's really neat that obviously you've worked with some of the organizations on this call, and we're going to dig into that. And again, a little bit about collaboration. And so thanks so much for being here, Lee. You're our sort of designated company here that's leveraging some of the funding, and we can use this as a real world example. And just for the folks on the call, right, we want to make sure you walk away with real information, real practical tips. And just to get into it, I'm going to ask the panelists here, if you are a company, what does involvement look like with some of the funding and program providers here? So, maybe we'll start with you, Dawson, right? What I'm thinking about now is, at what stage do companies typically engage with you, right? Give a fictional example or just a typical example of, what that looks like for you, Dawson, specifically. Maybe it's, what does the eligibility look like at the earliest stages for a company that you're going to work with?
Yeah, no, it's a good question. So shred eligibility is all about developing new products and new technologies, right? Whether you're further iterating on an existing technology or starting from something from scratch. And so, the earliest that we engage companies, I'd say, is typically when they kind of reach the end of their MVP journey. And the reason why is because not all new product development or product iteration will qualify for shred. The CRA is looking for something in particular that they like to call technological uncertainty. And technological uncertainty is sort of first felt when you're developing something, you have the end vision and goal in mind of whatever it is that you're developing, but you're starting to hit problems along the way to which there are not easy or known solutions to. And this is usually when organizations start entering a very frustrating and hard process of trial and error, met with a lot of failing forward as they kind of move the needle forward. And then that's kind of the earliest stage that we start to work with them, because that's really where they're hitting their first area of eligibility for shred. And so from a company standpoint of just kind of where they're at when that typically happens, well, I'd say usually it's around the pre-seed stage. Usually most founders are bootstrapping from the get-go. They're building out their MVP product, and sort of the pre-seed stage sort of coincides with when they take that next step in their product journey, where it would really start meeting the requirements of eligibility for shred. But even on top of the eligibility standpoint, shred at its foundation is a reimbursement style program. It's a reimbursement of the expenditures that you have as an organization. So we're talking employee salaries or payroll, contracting costs, things like that. So, we always kind of joke around, you could be building rocket ships to go to Pluto, but if everyone's bootstrapping, there's probably no shred claim there for you at that stage. So, active expenditures is a key thing to be able to take advantage of shred. But it's sort of, that pre-seed and taking that next step in technology development as an organization is usually the earliest when we start to engage.
So really early stage, you can engage with them. And the key thing there, again, is that there have to be, to use your words, active expenditures, right, for you to be able to reimburse them. So I think that's...
And it's always, if I could just add on one thing, it's always good to be, I'd say, on top of shred and to almost start planning for it before you start claiming. There's ways that you pay your people. There's ways that you set up your corporation, which can dramatically alter how much you get back from the shred program, or whether you even are able to take advantage of it or not. So it's probably a good idea to be more proactive about it than reactive when it comes to planning your first shred claims.
Yeah, fantastic. And maybe that's something we can get into a bit later in more detail. And there's, for everyone watching, there's a Q&A function. So if there's anything you want clarification on, feel free to ask a question in the Q&A function. And we'll make sure to get back to it later. Thanks so much, Dawson. Michael, let's jump over to you. Tell me, what makes a company EDC ready? What does it look like, just generally speaking?
Yeah, absolutely. So, I mean, I guess the key piece is it needs to be, oh, can you hear me okay? Perfect. Yeah, it typically needs to be okay, wonderful. A Canadian company with basically international expansion plans. So it's really key that they have a growth priority, and that's what the uses and sources of the working capital funds need to be for. Typically, EDC gets involved once the companies commercialize their product. Right? They have a technology readiness whereby they're ready to kind of go and grow and expand, and we can kind of come in to supplement that from a non-dilutive standpoint. Maybe it's a debt play, or in some cases, it's an equity play to help them continually diversify. Average size company that we typically see is anywhere between, say, 1 million in revenue to 50 million in revenue as the median sweet spot. And then depending on the inflection point of the business, we look to see what we have within our toolbox to help them diversify outside of Canada.
Mm-hmm. But to clarify, debt or equity, and then you said like you're typically looking at 1 million in revenue to 50 million in revenue is a sweet
correct.
spot.
Yeah.
And typically commercialized, and then the money needs to be used for some sort of export or growth expansion.
That's right. Yeah, exactly.
Yeah, wonderful. No, thanks for that. Nice and clear. Jen, let's move on to you. Talk about how SMEs enter into a relationship with digital and its collaborators. What does that actually look like? How do the funding calls work?
Perfect. Yeah. So when we're looking at supporting innovation with organizations that are, dedicated to growing in Canada and building, solutions in Canada for the world. So, if we think of the context sort of the Death Valley curve, it's around sort of that second valley of death, where one has to go deeper to scale, where these consortia are strategically aligned with each other. And there's purchasers, wanting to be at that table and are involved from the very beginning, sort of, they're really enthusiastic about the solution and how it's going to change the way they do business. So, with this demand-driven customer voice, every consortium must have an SME, and most often than not, the SMEs are the holders of the innovations that are being developed, that are being demonstrated and scaled, as a result of the projects. This idea sort of within digital of co-investment, sees all parties putting into the projects, not always money. It can include licenses, data, and other things towards project outcomes in this model. And I think sort of something really to clarify is that it's not a grant. It's not funding for the sake of funding. It's based on sort of a cost incurred model. It's non-dilutive, non-repayable funding to Canadian innovators, where we're co-investing to de-risk that tech development and accelerate the commercialization. So organizations need to be able to manage sort of this funding model and having those resources available to upfront the costs. When we think of organizations sort of committed to that leadership at the global stage, for example, we have a current call open in the future of mining and energy, and it's focused on Canadian solutions that will support Canadian mineral and energy sovereignty, providing global solutions and things in energy transformation and stewardship, and SMEs are a big part of that and the application, as an example.
Yeah, that's super helpful. And just to clarify, let's say you have a funding call open. Is there someone at Digital that's helping a company like with their application form? Like what type of support can Digital provide in that sense? Or
Yeah,
are there
absolutely.
folks on this call, or how does that work?
Yeah, absolutely. You can definitely share our contact details, but sort of as part of that, sort of when the initial sort of expressions of interest are coming in, for example, in this open call, there are members of our team that work sort of to field those questions, and as the expressions are in, kind of working to if there's clarifications needed, and they kind of work through sort of a larger process from an expression of interest, and if they move forward to a full project proposal where our team kind of gets more actively engaged with that, all the way through to an independent third-party selection, committee should they kind of make it to award. So there's a number of steps along the way that we're here to help. Yeah, we can speak to more of that later.
Yeah, wonderful. And again, for everyone watching, if you have any more specific questions, feel free to the Q&A function. We'd be happy to answer them later. Again, we want to focus this call on really practical advice and insights. So we've sort of done surface level, how can these organizations really help? Now let's dig into some real examples of, I guess we'll call them success stories, depending on what our panelists here can share. So I'm wondering, can we walk through some real examples where a company used non-dilutive capital or any of these supports from the organizations on this call, funding, validation, expansion? Let's talk about some real examples. Lee, with Metaspectral, perhaps you can be the first person to talk about, how you collaborated with Digital or any other organizations to validate a product, to grow a product, to commercialize a product. Take us into that, and then we'll move over to some of the other panelists to talk about some of their clients.
Yeah, no, for sure. And it starts off with kind of a funny example. So we're still a startup and have been for the last 6 years. So we're always looking for, ways to find the right support early on, to help grow. And it actually started with one of our founders, seeing by chance a networking event, signed up for it by chance, met some people at a bar at this event, started talking, to these other similar companies looking to grow and expand, as well as, met some companies that needed to address significant challenges with, new and innovative technologies, right? Like different ways to solve a problem. So fast forward a couple of years later, Metaspectral saw, a big opportunity to help the recycling industry to sort plastics much more effectively using hyperspectral sensors along with AI. And that's where we got linked with Merlin Plastics, Canada's largest plastics recycling company. So one of the primary founders approached Digital with a proposal for a strategic partnership and funding to accelerate our research and development efforts. And through Digital's collaborative, framework and commitment to fostering Canadian innovation, it proved to be an ideal fit. And so, through, the acceptance of our proposal, which the project lasted about 2 or so years, I believe, and just recently finished, we're able to secure, crucial resources that directly enabled us to do a few key things. So one, it allowed us to continue to build these strategic partnerships with, companies that had a challenge, a problem to solve, with a company with an innovative, technology, to find a new way to do things. And from there, it helped advance our core technology. So we were able to, significantly enhance the speed, accuracy, and scalability of what's possible with our real-time hyperspectral data analysis algorithms, and showcase it in an integrated hardware and software solution at the plant. So we actually have 3 different setups running on different lines just to showcase how much more efficiently it can process and classify different types of plastics to help increase the efficiency of that downstream process. And because of the collaborative project, we're able to expand our team, create these high value jobs, so from softwares to engineers, and bring in some additional deep learning experts, and then I was brought in to help grow the business in other directions. And it's not just about bringing financial resources to the table, but through the collaborative nature of the project, it's allowed us to demonstrate to other companies interested in adopting the technology. So we've been, reached out by other companies outside of Canada, through the States, through, Europe, to say like, hey, this product really seems to work. Can it work for this different purpose? So we're in the process of scaling our innovation through our network, through Digital.
Yeah, phenomenal. So it sounds like, again, like there was obviously the funding and the collaboration, but it actually allowed you to advance your technology and really innovate. But it's not just about the money, right? You said there were new partnerships that were generated as a result of working with Digital. So I think that's really important. And then it allowed you to grow your team, obviously. And then the thing I love about this, which ties it all together, is you said that this, in a way, started in a bar.
Yes,
right?
it did. It did.
That's my favorite part of this story, right? It just goes to show, again, building a network, building those relationships, building those connections. And I think it also provides all of those things, right? The network, the relationships, and it all grows from there. But again, the most important thing, right? Allowed you to advance your technology and theoretically in the future have a real impact with what you're developing. So I think that's important. Sorry, Jen, I'm just going to bug you quickly. Anything you want to add on to that sort of stood out to you, but Digital's role in this?
For sure. Yeah, I think I wanted to add a little flavor to kind of what Lee has just said, sort of, if we look at metaspectral sort of journey, it really is an indicator, of a continuum, right? That, sort of spanning, from earlier days, even sort of prior to this project that she was speaking to, they were in an earlier cycle of our flagship technology leadership program, where they were a successful consortium member, and kind of were already sort of at that time honing a lot of sort of, that novel tech that they're developing. And then sort of the example of then being a successful applicant, through a project lead, it's really also showing these examples of, how this novel technology and use cases sort of beyond original conception, how they as an organization are evolving, they're accelerating their growth sort of both within the scope of the project as we kind of look at what are those opportunities for unlocking commercial opportunities and kind of advancing their TRLs and ultimately, kind of moving into those CRLs, those commercialization ready levels. But I think also too, it sort of demonstrates, Metaspectral also kind of spreading their wings throughout the Canadian innovation ecosystem and sort of the different things that they've tapped into and the global stage. So for an example, they were selected recently as one of 10 Canadian organizations by Safran, which is a large French company that is looking to Canada for solutions as part of this Explore program where they're showcasing their AI-driven tech. So I think it's just one example of how these interconnections sort of can happen. And we have other examples where sort of with an organization's support and their ambitions where they want to grow exponentially in short periods of time, they're able to, move through their TRLs and to move through this by having sort of that commercial capital market talent piece front and center.
Yeah, wonderful. Yeah, it sounds like Digital really served as a bit of like a launch pad or like a help with the foundation building it as a launch pad. Thanks so much. Dawson, We talked about, where companies need to be whenever they're approaching Shred and Boast. Are you allowed to talk about any successful clients? Is there anyone that you can sort of spotlight so people have a real example?
Yeah, I mean, we enter confidentiality agreements with all of our customers, so it's fairly hard to share exact, hey, this is what this company did. However, the story can remain the same, and a lot of these companies are leveraging it in similar ways. And I think, it's very popular for organizations to claim Shred nowadays. Obviously, a huge program, right? Government hands out about $4 billion to Canadian organizations every year. There's around 20 to 30,000 companies that apply for this in Canada annually. So very, very popular. But what I think many of those organizations are maybe not so aware of is that they can actually access early financing on the Shred claim to grow faster. Right. So Shred's obviously a fantastic program, completely non-dilutive and provides a pretty nice cash injection to companies every year. One of the gripes with the program, though, is that it's very much after the fact of when they incurred those expenditures. So they're often having to wait significant time periods before they can actually get the capital and put it to use. And so, the way that we've seen, I'd say many companies grow quite a bit faster is from this sort of advanced financing where they can access up to 75% of whatever they've accrued so far in their fiscal year from a Shred perspective. So to give a live example, let's say a company has a $400,000 annualized Shred claim, and they're accruing about $100,000 worth of that every quarter as they're moving throughout the year. But one thing they can do is access this financing. They can get up to 75% loan to value of whatever they've accrued so far, and they can put that money to use by hiring more technical employees throughout the year, opposed to having to wait until the end of the year. And I think what's made this very popular for companies to take advantage of it in this sort of quarterly model as they move throughout their fiscal year is that having more technical staff on payroll actually increases your Shred claim by more money than oftentimes what the interest costs and even accessing the financing early on. So it's a really interesting way for them to grow much faster and access basically another capital pool without diluting their company any further. So I think that's why a lot of founders look at it like a no-brainer in terms of that early financing and how it's helped organizations scale much faster.
Yeah, I think that's pretty cool how they can tap into that throughout the year. They don't have to wait the whole year because I think that might, that might be a point of resistance for why people would leverage the program. But yeah, if they can tap into that capital throughout the year, I think that's really significant. Michael, you're probably in the same boat as Dawson. You can't talk about specifics necessarily, but maybe you can. But maybe you can give us a common case study, right? Like what is a typical case study, right? Match, like how does it work?
Absolutely. So maybe I can give 3 examples, and hopefully won't take up too much time here. And I can speak to some examples where our equity has come to the table to help some Canadian companies. So if you look up, for example, Novark is a recent equity investment where EDC came to the table to support this company through an inflection point with some of its scale up that was quite instrumental to what they were looking to do. But it really depends, again, on the company's inflection point. So as long as the company has a commercialized product and has some revenue, and understanding that the money could be to continue to scale or to help them diversify beyond what they're currently working on. And maybe they're working with partners for Shred financing and things like that, and they have a house bank relationship, which helps them with their operating capital. We flex in based on what the impact could be. So to give an example, let's say you have a business that has revenues from, say, $1 million to $5 million. And they're working, they've done a friends and family raise. They're looking at a Series A or Series A extension. They have maybe, I don't know, let's say a qualified investor who's at the table, who's looking to put forward a term sheet in support of some equity that they're raising. What EDC has done is we launched just post 2020, actually with a COVID-19 response, a co-investment program, which is our equity matching program, whereby if we have a qualified investor who has determined that there's an opportunity to do a raise for this business, maybe it's Series A or Series Extension, we have the ability to match that co-investor's contributions from anywhere from, say, the smallest ticket amount up to $25 million, right? So we would leverage, that lead investor from the, private sector, their due diligence materials to help with an expedited due diligence and approval process, but ultimately to help that company get additional money to cover with their burn and things of that nature, understanding that they have an international expansion and growth priority outside of Canada. So the mandate's still very important. We're not just kind of cutting checks. It really has to match the mandate. And then in addition to that, we have to look at kind of the ESG of what they're doing, right? Is it helping the environment, or is it, are they going to markets where EDC is approved, versus, global sanctions, things of that nature. Now, in some cases, we have companies say, hey, listen, we've done a Series A, we're done a Series B, we're actually looking for some maybe non-dilutive capital. We want to have more controlling stake. We're working with the bank. We have a lot of intangibles on the balance sheet, and we're looking to get access to more working capital, but the banks are having a hard time providing additional debt based on the fact that they have to look at historicals in order to lend forward. And we don't really have a borrowing base that's made up of, conventional assets, fixed assets, hard real estate, things of that nature. So in situations like this, we actually come to the table if there is a growth mandate, again, if they're going outside of Canada, to say, okay, senior lender, what if we actually provide a loan guarantee, a backstop based on a loan that you provide that's maybe a multiplier of their monthly recurring revenue from 3 to 6 times. And that helps them with their cash flow to help the business run. And then we'll just share in the security package, even if it's fairly light, with you because of where the company is looking to go. So the bank really likes this because they see EDC as a AAA rated Crown Corp. Right? So from a default risk, we're like, okay, well, this can really help the company do that. Once you pass that inflection point, we have to say companies, okay, I'm actually at a Series C or D. I'm actually looking for a direct investment. Is there something that you can do as part of a syndication, right? Here's where I'm taking the business, is what I'm looking to do. We have the ability to flex in there as well. So again, depending on the company's maturity and where they're looking to go, what their run rate is, how much burn they're looking to go through, and time horizon for that, we have different tools to flex in based on the company's needs, and it's driven based on conversation.
Right. So I mean, it sounds like the theme with you is flexibility.
Exactly. Yeah, it is flexible. It's just understanding the story and where they're looking to go.
And I'm just curious, again, you're talking about leveraging sort of the due diligence of private investors, right? And that'll sort of expedite your process.
Right.
What are timelines for these types of investments or co-investments?
Yeah, fair enough. I mean, and again, I guess a big question, like what's a qualified investor, right, to EDC? So we typically, for the matching program, we deem a qualified investor as any kind of institutional player who, it could be private equity or venture capital that basically manages at least 100 million in assets. We see that as a qualified investor. Okay. In terms of time horizon, it's pretty quick. I've seen deals turn around within 4 weeks. It really depends on the SIM, the data room, the access to it, and then what the need is and how fast the lead investor wants to go. But it is the quickest way for us to put capital into the market for these kinds of SMEs to help with their international growth strategies.
Yeah, no, fascinating. Thanks so much for that. Michael, maybe we'll stay with you quickly. What's a misconception? What's something that...
Great question. Well, a lot of people think we're slow, right? It's like, oh, you're federal government, it's going to take months or years. And I pride, myself in that, EDC works pretty quickly. I think that the biggest misconception is that we only work with like large multinational businesses, right? Or that we're only a one-trick pony and that, we have a trade receivable insurance. That's not the case. I mean, historically in legacy, EDC used to work with the multinationals because they were the GDP producers for Canada. But the landscape has changed. And about 10 years ago, we made much more focus to create solutions that had impact for SMEs. And the equity solution is one of those.
Yeah, great. And actually, one last one for you, Michael, before I go on to our other panelists and ask them about misconceptions. How do people, what's the best way for people to actually get in touch with someone from EDC? So other Crown Corps have people in market, you can book meetings and stuff. What does that look like for EDC?
For sure. So we do have a small outfit here in Vancouver. There's 6 of us in the Lower Mainland, 1 on the island, 1 in the Okanagan. The best way to reach out to us is actually through our website or through basically looking us up on Google, which sounds silly. And there's a main line for each regional team, and we can set up a meeting. Because there are less exporters than there are users of general capital for equity or debt, we don't have a branch network, right? So, but we are available and we are here. Our biggest challenge is people don't know we exist, right? Or if they do know we exist, they have a preconception of what we exist for. So the best way to reach out, LinkedIn or our website, which has been recently updated, and we can triage things fairly quickly.
Yeah, wonderful. Thanks for that. And Jen, maybe we'll jump over to you, just because I've heard of the misconception about digital. It's similar. People think digital only works with Microsoft and so. And so obviously Lee and Metaspectral are a great example of how you're working with SMEs and companies of all sizes. Are there any other misconceptions that you want to dispel while we're on this call?
Yeah, no, thanks for that. Definitely. I mean, I think, yeah, to your point that it's not just for large enterprises. In fact, over 2/3 is roughly over 70% of co-investments are directed to Canadian SMEs, that we strongly believe in, as well as in those robust and world-leading sort of solutions that they're developing. I think another one, as I've spoken to before, it's not a grant. It's an incredibly competitive process. Roughly 10% of proposals will make it through to award. And we've worked hard over the last 6+ years sort of in streamlining our processes and applications, but admittedly, yes, there is paperwork, to ensure as stewards of tax dollars, that return back to taxpayers and monies are well routed. I'd say also too that there's great emphasis at the outset from this context of collaborative sort of arrangements on ecosystem, on incrementality. Unique in our approach is sort of funding IP in this context of collaborative arrangements, IP staying in Canada, but with that commercialization encouraged beyond our borders and that customer orientation that's required. I mean, this is one of the biggest challenges that we hear and we know are faced by SMEs in adoption. So when those end users, are there sort of, and purchasers being that customer voice, and sort of what they're bringing, as well as sort of the academic institutions that are also part of this to be more commercially focused. There's that visibility, that transparency, those responsibilities to each other. So whilst there might be slightly different flavors, in terms of the lanes, everyone is still coming together as that collective and that same common goal of what's that big problem that they're trying to solve. So that's definitely something there.
Yeah, no, thanks for that. No, super thorough. And then who's on my team here? Dawson, sorry, I lost you. What's a myth that you can bust?
I think doing this for 6 years, probably the most common ones that I hear are, maybe a company's leveraging other sources of government funding. So they're taking advantage of IRAP or other government grants or something like that, and it's covering, a fair amount of their company's payroll or something like that. And they think that because of that, there's, nothing to go after when it comes to SR&ED. And while it's true that, if you're leveraging other government funding programs, and you always should, it'll water down the SR&ED claim, but it doesn't make it so that it's not worth claiming in most cases, unless literally 100% of the expenditures in the company are covered through other sources of government funding. So that's a very common one that we see. I'd say another one is organizations have the understanding that they need to be revenue or in revenue or be making money as a company to qualify for SR&ED. SR&ED has everything to do with the expenditures that you're incurring and very little to do with the revenue side of the business. In fact, most organizations, especially in the early stage, that are claiming SR&ED are not making any money at all. They're in a pure product development phase. So you can definitely claim SR&ED if you're not making any money as a company quite yet. And even if you are, you still can. It's when you reach a much larger scale of a company, we're talking tens of millions of dollars in taxable capital, where it'll start to impact how much you can claim for SR&ED, and it sort of starts to grind down a little bit. But for most early stage companies, that's not even something on their radar quite yet. They can claim SR&ED effectively.
Thanks, Dawson. There's actually a couple of questions. I've got another set of questions, but I don't want to hog the stage. So let me just ask one question from the Q&A. If you don't feel comfortable answering, that's totally fine. This question is directed, I think, at everyone. And I don't know if you actually guys can see it, but I'll read it. You might be able to see it actually in the webinar function. This question is, do you think it's feasible to apply for funds, look for ventures, or look for technical partnerships as a sole proprietor of a clean tech company, right? But it's IP granted abroad, right? But they've just incorporated in Canada, right? So maybe, again, that depends, right? IP is granted abroad, but they've just incorporated in Canada. Again, very specific. I don't know how that would affect your programs.
I mean, from a SR&ED perspective, Michael, do you want to go ahead?
No, go ahead, Dawson. Yeah, go ahead, please.
I was just going to say, from a SR&ED perspective, one of the key things, the key rules of the program is that you need to be the owner of the IP to claim SR&ED. So if the IP is owned, abroad or foreign, it's probably not going to be a program that you can take advantage of. Also, the corp structure being a sole proprietor. I know you also mentioned though that you just incorporated in Canada. You definitely want to be incorporated in leverage shred. So a couple of things there from a shred perspective. For the other topics, I honestly just don't think I'd be the best person to answer it.
Well, that's super helpful for this person. Again, they can reach out to all you folks on LinkedIn. But Michael, you had a comment, right?
Yes, it's actually similar to Dawson's. I mean, we typically need to see what the Canadian benefit is, right? We need to understand what's Canadian in it and how that Canadian direct investment abroad will ultimately grow. In terms of sole proprietor, we also have to work with businesses that it can't be an individual. It needs to actually be even a number co, but an operational business whereby if you have controlling stake, great. But we also need to understand the broader scope of what you're doing and where those flow of funds go. Do they come back to Canada? Are you hiring people? Like the meeting, the program eligibility with just for an equity standpoint, with the institutional investor, for example, is just one step in EDC's expedited co-investment review process. The approval is not assured, and ultimately, the investment opportunities are assessed by EDC to ensure that they align with our strategy and standards, including things like the Canadian benefit of the business and its plans.
Yeah, and if I can just jump in there to echo sort of similar for digital too, it is sort of that, that Canadian sort of net benefit. And also in terms of eligibility, it's sort of, it's meaningful and substantial presence in Canada, so, that is also something that is part of us as part of the criteria in that. So.
Thanks so much, Dawson, Michael. Jen, let's do another one. And Jen, this is like it's directed like at you specifically. So Jen mentioned that digital is a co-investment and not a grant. From a shred perspective, is the digital contribution considered a government contribution that reduces the shred claim?
Yeah, this is actually a really good question. And Jen, I might need your help because I'm not perfectly familiar with the exact type of investment or how that relationship works between digital and a company that they're involved in. What I can say is that it's not just government funding that can water down a shred claim. It's really a donation of any type. So any free money, let's call it, that your organization is receiving that isn't in the form of like a contract where you have to deliver some value or a service back to them. If it's purely, hey, here's some money, go and invest this how you like, and we don't require any of it back, or anything like that. It doesn't matter if it comes from a private organization or from a government organization. It would still be something that would water down the shred claim as sort of, you're paying for those, your employees and your contractors, not out of pocket at that point. And the shred program is particularly looking to refund out of pocket expenditures from the organization. So I hope that kind of answers it, but I'd love to hear Jen's take on this as well.
So just to kind of briefly sort of jump in. So, yes, there's an ability, to stack, up to 100%. And I think, if you're getting shred, that's something that also needs to be discussed further. That said, because, that there is that industry contribution and co-investments on the projects, there's a lot of nuances sort of, there. So if it is just fully, not that the industry contribution and those other criteria aren't there, then that's also going to impact around eligibility questions. So, depending on the project stream and the nuances, we're happy to take this offline if there's some very sort of specific questions that we can kind of work through. But it isn't sort of a one size fits all. It's all kind of really looked at. Yeah.
Thanks so much, Jen. Thanks so much, Dawson. And then there's one more question. I'm not sure if anyone on this call will have the answer, but I'll just throw it out there. Do any participants have knowledge about Scale AI, which is, I believe, another of the global innovation superclusters? And so the question is just about their early stage of funding. If it's no, it's fine. I see a couple of heads shaking. Go ahead, Jen.
I was just going to say, so Scale, as digital is one of the 5, of the Global Innovation Cluster program. And so, we all sort of, are offering sort of different sort of avenues for calls for proposals. So, sometimes focus and entry points. So there are some nuances kind of in terms of that. And sometimes even specific calls or challenges will have sort of criteria around that in terms of what they're looking at for minimum investments, minimum consortium partners, et cetera. So, ultimately, it's that focus on unlocking those opportunities for these made in Canada technologies. technologies, but with a slightly different focus. So again, we can kind of, help to guide folks there or answer questions on our side. But from that AI perspective as well, I know sometimes that's another sort of one of the misconceptions, I think, if I can jump in, is that, there's no AI in sort of the work that digital does, where in fact it's kind of underpinning and enabling that AI development. And our investments, over $500 million has gone into that portfolio, and, over 200 assets are either in development or in the pipeline. So just to kind of demystify that there's flavors between us. So happy to share more after too.
Wonderful. Thanks so much for that, Jen. And actually, we're only got about 15 minutes left, so I better get into our closing round of questions. And this is a question for everyone. Feel free to answer this however you want, right? But as the entrepreneurs and founders and SMEs are headed to Web Summit, they're going to be in the room with, hundreds of investors and other entrepreneurs and media people like me. What should they be preparing for? Like, what are the 1 to 2 things they should be ready to talk about in terms of their company, whether it's like traction or like customers? Like, what would you be recommending to them? Dawson, why don't you kick us off?
I think it depends on what you're looking for at Web Summit, but I think, as a foundational piece of it, I just know your numbers. For any investor, they might have some quick questions off the hop. If you probably already have prepared a pitch deck of sorts, which would, share a lot of the story of your numbers as a company. But I think that's probably the most important thing in having those conversations, where founders or investors might want to know some of those details off the hop, to know if it's a fit for them or not.
Yeah, know your numbers. I like that. Michael, what about you?
I think Dawson nailed it on the head. That's really important, knowing your numbers and also knowing where you're going, right? I mean, for us, we can't look at anything until we validate the mandate piece. So understanding where your target market is, maybe having some quick conversation or background in terms of what that SWOT analysis would look like, where you've been, what your management style is like in terms of the direction. Those are all really important in addition to the numbers. And then also knowing who you're already entrenched within the ecosystem, right? You have a senior lender. Are you doing, if you're doing a raise, where are you at? Which one? And has your growth been organic, or have you been buying businesses, depending again on your inflection point and size?
Yeah, wonderful. Jen, what about you? And then Matthew, I feel like you can jump in. You jump in if you want as well. But go ahead, Jen. Oh, okay.
There we go. I would say don't get lost in the tech. Cut out the noise and really focus on your value proposition. They're buying the value that your solution promises them. So if you're looking at that, so it's, I can prevent hospital readmissions by 50%. I can help you save 30% of your costs, or 40% more drilling accuracy, or whatever that is. Really, focus on that. Don't get lost in the noise.
Yeah, I love that. Thank you. And Lee, what about you? Or I might ask it differently, right? Like, how is a company like Metaspectral going to take advantage, do you think, of Web Summit and having 20,000 people in Vancouver and 600 investors and that sort of thing?
I know. I was going to say do your homework, but it's kind of hard to do your homework and research on that many companies. But it is true, though. I mean, if you have a solution to a hard problem, like find those investors that maybe have a portfolio of companies or tech that they're focused on, and try to figure out, can you solve a problem for them, right? Don't just go up to investors and say, what do you need, right? Like, go forth with, here's what I can give to you, right? This is what we can solve, and know who your investors and their portfolio is about, and track it that way. It doesn't make sense to just throw it out to see who might, well, in some case it might, benefit to try to grab all the low-hanging fruit. But when you really want to, solve a problem and you have have a solution to offer, know who you're talking to, and try to get traction that way.
Yeah, I love that. And so what I wrote down here, so know your numbers, know where you're going, don't get lost in the tech, really focus on your value prop and the benefits of the tech and innovation that you're developing. Lee, I love that. Do your homework. Matthew, I think we're ending a bit early. So Matthew, I feel like you should jump in and end it for us with you.
Yeah, for sure. Thanks, William. But yeah, I would say as a comment, when you say what we should look for if you come to Web Summit, at least from the banking side, I know numbers matter, but at the end of the day, it's all about the management team as well. So definitely speak to your expertise, your background, And as everyone had mentioned, like speak to where you're going and how you're going to do it. Because at the end of the day, as a senior lender at BMO, for example, we really care and value the the management piece over the money at the end of the day. And don't get discouraged if you go to a bank for like senior lending, because that's where Michael and his team at EDC can come in and support. So when we have their backing, EDC and a bank like BMO would work together to find ways to get creative and provide you solutions. But yeah, so that's all I'll say about that. But yeah, thanks, William. Thanks, everyone on the panel here today. And thank you, everyone that's on the call. It's been very educational, even for myself, because as a mid-market diversified banker, I don't really deal too much with the early stage startups or tech companies. That's more for our BMO Tech group. But yeah, it's been a lot to learn and digest on my end as well.
Right. Thanks, Michael. Thanks, Dawson. Thanks, Jen. Thanks, Matthew. Thanks, Lee. And thanks to BMO for co-hosting. Thanks to everyone who's joined us on the webinar today. There was a question earlier about will this be recorded? It is being recorded. And then the other thing I could note is that the Vancouver Tech Journal will also do an article that will summarize all this. So you can look for that.
Yeah. So I don't want to jump in here, Will, but I do notice there is a new question that was asked 4 minutes ago.
I didn't see it pop up.
Yeah.
Okay, there you go. I didn't see that. Thanks for catching that. All right, one more question, because we do have a bit more time. Let's just look at this. All right, what are the options for digital product development? We all are aware of that in the not-for-profit sector, trying to solve a problem by creating a digital product, but they don't have any grants at this point. But they really need to build this product. Right. So is it essential to build this in a for-profit company to access the type of funding that we've been talking about?
I think just to clarify, I don't know if the company, for the person asking, if they are a nonprofit or if they're building a product for non-for-profits. What I can tell them is from a SHRED perspective, and I think for many pretty much all tax credit programs, is that they're not available for not-for-profits, mainly because not-for-profits don't pay taxes. So that's sort of an immediate out on the tax credit front. I don't know about all grants per se. But again, if this is a private company that's building a product for not-for-profits, that's a different story because you're still a private company that's building the technology. SHRED, all these other grants would be available to you just like it would for any other organization building a new product. So hopefully that helps.
Yeah, really good answer, Dawson. Hopefully that helps to the person that asked. Now at this point, we've gotten through all the questions, so I think we will call it a wrap, but thank you for catching that, Matthew. Once again, thanks to all of our panelists and thanks to our hosts and thanks to all of you for tuning in today. And I was gonna say have a great weekend. Not quite yet, one more day, but anyway, have a great day, everyone. See you soon.
Thanks all.
Thanks, everyone. Bye.
Thank you very much.